We're continuing with our coverage from the BMO Metals and Mining Conference, and my next guest is the Chief of Alamos Gold, John McClusky. Thanks so much for joining us today.
It's a pleasure to be here. Thank you.
So we're at the conference. Obviously, this is a great ground, a fertile ground for talk about mergers and acquisitions. And acquisitions is not a word that's foreign to Alamos Gold. You guys are a Canadian gold producer with projects in Mexico and Turkey. But let's talk about some of these acquisitions that you've had this past year.
Yeah, we were very active in the market last year. We took over two companies, one called Esperanza Resources, a second one called Orsa Ventures. We picked up the Esperanza Gold project in Mexico and a project called Quartz Mountain in Oregon. Yeah. So it's our first foray into the United States as a company.
And that's Robert Friedland's old project,
It was an old Robert Friedland project.
So let's talk about that. I find that interesting.
This goes back to practically the very beginning of Robert Friedland's career. His first company, Galactic Resources, it's somewhat notorious for having developed a project called Summitville, which ultimately, quite unfortunately, ended up with a fairly significant spill, which in the end bankrupted the company. So the Quartz Mountain project, which had been getting a lot of work and was progressing very, very well, it more or less ended up in a state of limbo, and it sat there for many, many years. And so it's a fabulous project. It hasn't really seen any work since the early 1990s, but it's well understood now as being at the northern end of the Carlin Trend. It's a Carlin style ore body, gold ore body. It has tremendous exploration potential beyond what's already been defined, but during the years that it was a galactic project, they developed 2.9 million ounces of gold, half of which is in heap leachable oxides.
So John, I'm always interested to know how these projects fall into mining CEO laps. How did you come to hear about it?
Well, one of the benefits of being around for about 3 decades in the mining business is you get to know a lot of people. And 20 odd years ago, I met a lady in Vancouver who was just a tremendous geologist, a lady with a really great reputation. She was involved in the BC government and its relations with the mining industry. She did a very good job on that front. She had been involved in numerous exploration companies. But fast forward 20 odd years, we hadn't been in contact for a long, long, long time. But she was running a small company that had this project, and they were running out of money. And she contacted me and convinced me that we ought to have a look at it. And I'm very thankful that we did, because we ultimately acquired it.
So now in 2014, are you still in acquisition mode?
Less so. We've really got a tremendous development pipeline now between the two projects we're developing in Turkey, the project we've now picked up in Oregon, a second project we've picked up in Mexico. We have a development pipeline that can see this company build a production profile over 500,000 ounces of gold a year, low-cost production. And from that point of view, nobody's holding a gun to our head to do another deal, so to speak. But we have over 400 million cash in the treasury. We have no debt. So from that point of view, we have the opportunity to do another deal if we want. But in order to do another deal, we're just going to have to see really good value.
So if we look at your Turkey projects, how much gold do you think you're sitting on there?
Well, in the all we've ever talked about in our Turkish projects are the resources we have in oxides, and under our feasibility study that covered the Ada and Krasli deposits, we've got about 2.5 million ounces of gold. Over and above that, we have a new discovery which has not been a part of the feasibility work, because it was found quite late. But that's probably another 600,000 ounces of gold in the so-called Chamiert zone. So we're certainly approaching 3 million ounces in all-in resources. Like Chamiert is an inferred resource, but measured and indicated right now probably around the 2.5 million ounces.
The turmoil that we saw in Turkey, did that at all affect operations?
Well, we're not really in production as such, but it has really affected our timeline more than anything. By now, we're past all the rehearsals. We've finished the feasibility study, we've finished the environmental impact assessments. What we're looking for now are permits to allow us to break ground. We're ready to break ground at those projects. And the political turmoil we've seen over the last 6 to 8 months has caused delay because the country's very distracted. It's going to remain distracted as it goes through a political cycle. There's going to be 2 elections, one in the spring and another one in the fall. And I think until those elections are through, we're not going to be able to make any progress in Turkey.
John, finally, we're at the BMO Metals and Mining Conference. Is this a different sentiment than what you saw last year?
I would say yes. As you may recall, last year we were at a point where the market seemed to be waiting for the other shoe to drop. And if you recall, by early April, it did drop, and the gold price fell from roughly $1,600 an ounce. It dropped, and over $300 over the course of the next several months. And so the sentiment at this conference, it seems to be better. The impression I get is investors, they seem to think gold has bottomed and is basing here. And if that's the case, we're not sure how long a bottom it's going to put in, but eventually it's going to turn around and start to climb again. So I'm actually feeling quite optimistic about it. I'm not looking for a real fast turnaround in the gold price, but looking out a year, 18 months, I'm anticipating we're going to see better.
Do you monitor the gold price carefully, or?
You know, we do, but because we're gold sellers, if we're not watching that.
Yeah, no, because I have some mining CEOs that tell me, look, I don't care if it goes up or down, and I have other, CEOs telling me, yeah, I watch it closely.
Well, I can't say I don't care about it because I produce gold, and the higher that price is, the more revenue I'm going to generate. So naturally, I care what the gold price is. But I've taken a strategy with Alamos to acquire projects that work at sub $900 gold. So by the time we build the mine and we're operating the mine, it's going to be generating profit, even if gold is under $1,000 an ounce. And that's somewhat different than the approach a number of other CEOs are taking. They're sort of, buying maybe bigger things, things that are going to require bigger capexes, things that work at, say, $1,500, $1,800 gold. In other words, those are more like options on a rising gold price. That's not the route Alamos takes. We're very careful, we're very, let's say, circumspect in the way we approach acquisitions. We don't do a lot of them. I mean, since we acquired Mulatos in 2001, we've only done those 2 other transactions. And those were both last year.
So $900 an ounce, basically.
Basically, at $900 an ounce, our projects are break even.
Wow, that's all in costs.
All in costs, all in sustaining costs. If it doesn't pass that threshold, we're probably not going to buy it.
How do you keep it at that mark?
You have to buy carefully. You have to buy carefully, and you have to look for a particular deposit type that will lend itself to those kinds of costs. And typically you're going to find that in open pit heap leaching. Open pit heap leaching costs tend to have low capital costs for development, and ultimately they tend to have lower operating costs.
All right, impressive. Well, John, thanks so much for being with us.
It was a pleasure. Thank you for having me.
Thanks for watching our coverage from the BMO Metals and Mining Conference. We'll have more for you. In the meantime, you can email us comments and questions at newsfeedback@kitco.com, or you could follow this conversation on Twitter at Daniela Cambone. Thanks for watching.